Hi, I'm Owen, the host of the Australian Finance Podcast. This podcast is proudly sponsored by Betashares, one of the leading providers of ETFs here in Australia. Serving thousands of financial advisors and over 1 million investors, Betashares manages tens of billions of dollars on behalf of investors right across the country. I'm proud to partner with Betashares on the Australian Finance Podcast, Australia's premier financial podcast, because there is great alignment in the long-term philosophy shared by both businesses. I hope you enjoyed this episode of the Australian Finance Podcast. Hello and welcome to the Rask Network. What you're about to hear and see is limited to general financial information only. Please be sure to speak to your financial planner or refer to our financial services guide available at rask.com.au/FSG before acting on the information. Gemma Mitchell, welcome to this episode of the Australian Finance Podcast.
Thank you. Thanks for having me.
It's always good to chat. New year, new me, goal setting. That's what we're talking about today. And this is the first of a series of episodes which talk about things such as, I've got it here in front of me, mindset and behavior, budgeting, income, debt, property, super, shares, ETFs, tax, protection is the last one before we jump into Q&A. And we're naming it that because it goes beyond just insurance and those types of things. But we're starting at the beginning and we're starting with goals because goals are important. Now, if you're like me and you're not much of a goal setter, don't worry. We've got stuff for you. But if you are more maybe a bit like Gemma and you do have goals and you tend to stick to them, well, we've got stuff for you too. So we're going to try and keep these episodes in the summer series, Gemma, to around about 20 to 25 minutes. Can you tell us, to begin, goal setting, goals generally?
Yes.
Talk to us about that. Just talk to us generally, and then we'll dive into why they matter.
Perfect. Well, I think goals in any aspect of your life are really important, whether they're work goals or fitness goals, or in this case, finance goals. We want to have something that we're bettering ourselves and we're aiming for. So the goal itself it's just the process or what you're working towards that you're setting targets for and that you can be really, really motivated for. But in saying that, I think it's really, really important of how you set the goals and what goals you set. But yeah, just like finance, fitness, everything kind of applies the same. There's the same concepts. So it's not anything new in our lives. It's just a different way of thinking about things.
Now, you've always been a big goal setter. Am I right in that?
I have, yes.
Yeah. But you also, being a money coach and financial advisor, you would also deal with a lot of people who are not big goal setters, right?
Yes.
And I feel like people like that, like myself perhaps, there's still a lot we can get from doing the right things and following the right processes. And the episode, if you're not a goal setter like me, I think the second episode is the one that you really want to listen to, which is about behaviors and mindset, because that helps with goal setting.
Yes, absolutely. And I think when it comes to goal setting, people sometimes they overthink it as well. Like people think, I've got to have these huge, audacious goals. And maybe you don't. Like maybe your goal is 10 weeks to improve how you manage your cash flow. Or maybe it's like think of fitness goals. Like nobody's out there, well, not some people are. Nobody's out there going kind of 0 to a marathon. Like you're setting smaller things. So I think that's the exact same thing with finance. It doesn't have to be, I've got a financial independence goal. I think we all should, but it can be smaller. So when people feel like they don't have goals, potentially they're looking too broad and they need to start a little bit smaller.
This time of year, a lot of people do set goals, and the data tends to suggest that people only stick to them for weeks, if that sometimes. So hopefully by listening to this episode, you have a bit of, inertia and a few things to keep you on track. So real quick, why are goals important?
So goals, it's about giving us the direction. It's so we've got the focus and know what we want to achieve, but it's also the process of actually coming to your goals, like setting your goals, is really about discovery about what's important to you and your values. Nobody can work towards something that they're not excited about or it doesn't mean anything to them. So really the process of goal setting is just getting really clear on what your values are, what's important to you. And that alone is so much value, potentially even if you don't have specific goals like I do, and the milestones, but just the process around getting clear on your values is where goal setting starts and why it's important.
I love this saying, it's if you don't know where you're going, any road will take you there. And it's this idea that, unless you have some vague understanding of I'm heading north, you might end up going south you don't even realize. So the next point that I wanted to just kind of hand the reins over to you is goal setting is a massive topic, not only in finance, financial planning, money coaching, even if we're DIYing our financial independence journey, in every aspect of life. So what if I could challenge you to give us the key points of goals and goal setting in just maybe like 5 or 10 minutes, I'm going to hand it over to you.
Yep.
And I might butt in with a few questions and follow-ups, but I'm willing to go anywhere. So you be our field guide for goals.
Okay, great. Well, I think, like I've already mentioned, it's so important for you to make sure that they align with your life. And I've talked about this like with my own goals, that I just had a checklist that I thought this was life, you know, the engagement, the marriage, the overseas trips, the kids, and I just kind of didn't really question why I thought like there's all this society pressure and what everybody else is doing. So I think it's really important that if you're going to have goals, and we all should have goals, and I think everybody does, potentially they're just not labeling them like that. But if you're going to have goals, you need to make sure that they truly align with what you want and who you want to be and what you want your life to look like. So perfect example is how many people I meet that are like, my goal is to get my first property. And then when you actually talk to them about, well, what are your goals? And maybe you're going to live overseas, or you're going to have a nomadic lifestyle, or, you know, does it actually make sense for them to buy a first home? Does an investment or there's so many different ways that you can achieve what you're trying to achieve, that feeling of security, safety, wealth, or whatever it is. But you need to work out what is the driver. What are you trying to chase with that goal and why it aligns with you? So that is the most important thing. And I think with that, it's okay for it to change as well. So you may have a goal initially and be really confident that that is something that's important to you, but we all change and we adapt. Life evolves, and so should your goals. So it's okay to be working towards something and then shift gears.
I think that's a really important point, because for some people, they don't know the difference between like failure and just like a goal that is changing for the good, for the right reasons. And you mentioned that it's like aligning to values and who you want to be. Without going too much into behavioral stuff, although you can, where does that process begin?
I think it begins with understanding who you are and what your values are, what's important to you and why it's important to you. So we all have different values, whether it's family, quality time, travel, experiences, like whatever that is, but it looks so different to different people, and what we get from experiences is also different. So I think you need to know a lot about yourself and what is going to be a fulfilling life for you. Like, tomorrow's not promised to anyone. We want to make sure that we're doing things that that are really important to us and that we love. And money is a tool that supports that. The goal shouldn't be to have just lots of money for the sake of it. The goal should be to have finances and financial freedom to give us choice and to be able to then fund the life that we want. So you need to really understand what that looks like for you. And that's the main thing that will probably change. Like, as you evolve and grow, that's your core beliefs and your values will probably change. And that's when it's okay for your goals to evolve as well.
I found when I was growing up that a lot of the kind of, because I felt like I wasn't good at goal setting for whatever reason. I just kind of latched on to what people told me. So if it was like, for example, you should save. Therefore, I went and saved as much as I could. And then I didn't go away on holidays. Like, I never did a Europe trip. I never even went and spent money on anything, really. And so I lived kind of like a miser in my 20s, which I really do regret. So I wish I had more of a, handle on what made me happy, whether that was like quality time and all these types of things. If I'd only just known, then the goal setting would have kind of fallen around the outside so much easier. Yeah,
and that's where the mindset stuff comes in as well, because there's so many different the outcomes that what happens in our life is from behaviors that we've done that comes from a belief. And it's, whether you've heard it somewhere or that's the only experience that you had on how people thought about money, then that's going to impact the decisions that you've made. So we'll dive into that in the other episode, but it's just all so interlinked. And I think the other thing is, I find that if people potentially they've gone through something, like they've had a big shift, or they've had an awakening, or it might be an external event, and their goals, now they're really reassessing if that actually still aligns with them. I think it's okay to not know what your goals are. If you're trying to really figure this out, it's okay to not have goals for a short term, but you still need to know that in the future you will need money when they decide what goal. Chances are it's still going to have a monetary value. So even if you're not super clear on what it is now, still making sure that you're moving in the right direction, you're getting good with your money habits, you are, saving or investing or whatever. For the moment that you have that clarity on what's important to you, you're already halfway, there. You're already on the journey to being able to make that a reality, whatever you decide it is.
That's so true what you just said, because like me, I said before, like I didn't really know what my goals were. I kind of overcompensated to the good side, if that makes sense. Like I kind of saved too much, but had I not saved anything, I would have been in a very different situation when I did know what I truly wanted, more time with family and that type of stuff.
Yeah, exactly. And I think we were talking on the last episode where I was saying like there's habits that are seen as good money habits externally, but that doesn't mean that they're actually healthy. So oversaving me, me setting like my really goals, putting lots of pressure on myself in different ways. Like, they can be seen as good things to be doing, good with your money, but it doesn't mean that it's actually healthy. So it's about balance, but you do what you can with what you know. And then when you know better, you do better.
How does someone stick to a goal?
I think sticking to your goals means checking in on them and checking into like reflecting back on, does that still align? Am I on track? Is it actually serving me the way that I thought it was going to, or has something changed? So it's not a set and forget thing. Like if you've got a goal, you need to break it down into milestones. Like imagine going from having so you want to save for your first home deposit, 0 to say 50,000. That is huge. You need to have milestones along the way that you can celebrate, little shorter goals that make up that big one so it doesn't feel like such a stretch. But along the way, you need to also be checking in if that's still your goal or if has something shifted or is the priority changed. That's the most important thing to sticking to it. It needs to still be like your value and your why and important to you.
Do you track your goals in any way?
I do, yes. So I love a spreadsheet. I absolutely love a spreadsheet. And I have my financial independence goal, right? So I've got a goal that I want to reach by a certain age. And I've actually broken that down into, what that looks like by every birthday. Now that's probably not over the top if you think of like, I've got a financial planning background and that's how we kind of project clients' plans out. Where I've failed in the past, and I'm working with a coach at this at the moment, is my goals have always been monetary wealth, which I attribute to success and stuff. Whereas I'm trying to do more of the value side of it. And it's not really about the figure, it's about all of these other things. So again, I've got good habits, but they're not necessarily healthy. So I'm trying to bring a little bit more of that into my goal setting.
It's interesting because you frame the goal as kind of like a monetary value, which by itself on a spreadsheet really means nothing, right? Mm-hmm. But then what does that translate to into how you want to live your life? That's probably the key thing.
Yeah. And I think that's where you actually need to start when you build a goal, and that's what you need to focus on. Whereas, in the past I've focused too much on the external, like what it looks like. But there's so many different ways that I can achieve what I want to from the, like that feeling that I'm trying to get, that independence. So I think, you just really need to be sure on your values and recognize the patterns that you're doing and how you're working towards things, and if it is healthy or if there are things that you need to tweak.
So you said something a moment ago, which was that you're seeing a coach, which was someone that's been a financial advisor for however long.
Yes.
Seen however many money coaching clients and given people feedback and help and support. You still, dare I say it, haven't quote unquote figured it out. Like you're still working through that. Would that be fair to say?
Absolutely. And this is because everybody has all of these patterns, these biases, the way that our relationship with money. And just because you work in finance or you're a financial advisor doesn't mean that yours are healthy and the epitome of what people should strive for. It just means that I'm much more aware of what my superpowers are and what's helping me and what's hindering me. So I know the value of getting a professional, and I know how that can help me stay on track because I do it for other people. So yeah, I think that you need to ask for help. And if you want to be successful, like every tennis player, like professional tennis player, they have a coach, not because the coach is better than them, but because they can help them stay on track. They can identify things that they're potentially not picking up while they're in the moment.
That's such a good analogy. That makes a lot of sense. It seems to me like you would have done that before or said that before.
Oh, once or twice.
I might ask you to double back on something, which if someone is completely new to this, we chances are have thousands of people listening to this episode or watching it, hello on YouTube, and they're thinking, I do want to do better with money this year. We're going to include heaps of resources and we're going to do a Q&A at the end of this series, so send your questions in. But if someone was just starting out right now, they've never done this before, what would you say to them to do once they've finished with this episode and they're like, okay, this sounds good, I can get around these guys, hit subscribe. What could they do like in this moment? Like could they physically do something? Could they write something down? Like how would you start?
I would literally start with a pen and paper and just sitting down and saying like reflecting back is probably the easiest way to start moving forwards, is to look back. And it's not from a place of shame and beating yourself up. It's more, right, well, what have I done up until this point? What are the things I'm proud of? What was it, saving for a Europe trip? Was it getting my first car? Like little things that even if you don't recognize them as great, like there are things, like even if you're not good with money, there are things that you would have done well. Is it that you don't have a credit card, or is it that you pay your rent on time? Whatever it is, but taking stock of, well, what have I done up until this point that's been good? And then looking at what are the things that I wish I had have done differently or that I could have probably improved on. So that reflection is so important, because you need to know, well, what led me to get to these points. And that can help you identify some patterns as well, that potentially there's some bad behaviors in there, or, again, that'll lead into the money mindset stuff. But just taking stock of where you've actually come to, like how you got to this point, not from a beating yourself up, but from an understanding point.
So not from a shame point, but just like a curiosity.
Yeah, absolutely. And we need to reflect so that we can assess and look for opportunities. So that's your main thing. And then looking at, well, what do I want to do going forwards? And while we don't want to compare ourselves to other people, especially if you are not in a similar position or you don't have all the facts, like don't compare yourself to social media. But if you look around you and go, who do I know that I think is good with money, and what are some habits that they do? Not that I want to have the same car as them or this, but and maybe one of your goals is, I don't want to have a heart attack every time my insurance bill comes, or I don't want to have my account overdrawn. Like they don't have to be huge goals. Like I want to go to Europe for my 40th, which is one of my goals. But they don't have to be massive. They could just be, I want to be able to pay this bill when it comes up on time, or I want to be able to open my internet banking app without worrying about all the anxiety that goes with it because I might have overspent. Like your goals can be just to improve little parts of your life. They don't have to be huge. And this is what I was saying before about a lot of the time people overthink them. So if you can set really small goals and make them achievable, you're then going to go, oh, look at that. I did that. I achieved that. I could do that. And then you're going to set bigger and bigger goals.
I love that. I remember before I had a budget, I would always freak out if I had money in my bank account. Like I always just thought, and this will come to we'll talk about this in the budgeting app that's coming up. But I remember thinking if I tap my card, they're just going to deny it. Like I had this kind of the system's against me mentality. And I was just I don't know. But then after a while, I'm no, I do actually have money in that account. My budget's set up. It's automated. This time of the month, I've been paid. There's going to be money in there. If I tap the card on that cup of coffee, cool. And for whatever reason, if it doesn't go through, if I miss something, I got money. So it's okay. Total mind shift.
Yeah. And it's your internal talk as well. It's most of the time, it's ourselves telling us that we're bad or this is going to happen, and it's not actually the reality. I've worked with a psychologist, and they would say, look for the proof. So your brain will automatically assume, or tell you a story, but you actually need to look for evidence if that's right. So when has your card actually declined? Or when have you set a goal and failed miserably at it? Chances are that you probably haven't. It's not as bad as what you thought. So if your brain and your internal talk, your self-talk is going to those negatives, you actually need to stop and go, right, okay, I'm actually just going to look for evidence that this is actually right. Is this something I actually need to be afraid of? If it is, great, then you start kind of actually putting some systems in place to make sure that you're not setting yourself up for failure. But if it's come out of nowhere and there's no evidence, then you can try to rewrite that.
Look for proof, did you say?
Yeah. Look for proof or look for evidence. The psychologist said it to me and I was like, that is so true. Like,
yeah, it's just like that. That's the factual, like it's in front of you.
Yeah.
Right?
And they're like, well, if you find all this proof, then you should be anxious about that thing. Chances are you are not going to,
It's funny because like now that I think about it, I don't think I have had moments where I did tap my card and like I've been like filled with dread because it's always like, I'll have no money. I'll go to tap the card. They've made the coffee and then I don't have any money at all. Like
I was actually in Coles the other day. It was pretty embarrassing, but it was also like beautiful. So I had the kids with me and I'd got a couple of things like milk, a few different things, and my phone wasn't working and I didn't have my wallet with the actual card and my phone tap wasn't working and it was like $10 and this guy paid for me and I was like, oh my God. But I was mortified, but I do that to people like, and I wouldn't think anything of it, but I was mortified. And then like the week later I was back in the shops and I was, I don't know, taking my time with something and my daughter goes, Mum, are you waiting for someone to pay again? I'm like, yeah, this is my strategy to financial freedom.
Oh, that's great. Okay, so we've come to the end-ish of this episode. There's one final section which we're going to include for every one of these summer series specials, which is where do people go to get help? Like if they are at the point in the road where they're like, you know what, this year it's new me, or if maybe I'm in a couple, maybe it's my family unit, we want to be better. By this time, 2026, we are going to have a savings buffer. We are going to have an emergency fund. We're going to be optimistic about our money, but I need some support.
Yes.
Who can they go to for this idea of helping me get on track with goals and that sort of stuff? Like where can they go?
Yeah, I think that is really, really important. Like it's absolutely okay to not be able to do this yourself. So that's the first point. Like nobody's born with great money management. Like it's a skill. So knowing where to go for help is really important. So this is where like a money coach could be really valuable. And we can link that in the show notes. So a money coach can help you with the behaviors, your goals, the foundations and how you manage money. It might be a financial advisor. You might be ready to set huge goals and actually have the structures in place to achieve them. And it might be part of a big wealth plan. So a financial advisor, having an accountability partner, whether that's a money coach, a friend, something else that keeps you accountable, because you can have a goal, but actually making steps to achieve it is a totally different thing. So I think they're probably your main things, making sure you've got somebody keeping you accountable, whether it's a financial advisor or a money coach. And the other thing I wanted to say on that is it's okay to outgrow the professional. So back to the tennis coach analogy. I bet like Pat Rafter's coach is not the person that he started with in primary school, right? So it's okay for you to have somebody initially that is right for you and then you outgrow them as you really take things to the next level. I think that's totally fine. But a lot of us get stuck with, oh, well, this is comfort or this is loyalty and this person's been with me from the start. But that doesn't mean that you don't need to go up some levels with the support or adapt things as you change.
I was thinking about your example before with the friend or the gym analogy. Like going to the gym with a friend for me has always been more productive.
Yes.
Like, having mates that would go and do it, or even like team sports. I see it as like a really good opportunity to be fit and healthy with a bunch of mates. Mm-hmm. And without them, there's no way I'm getting up in the middle of winter here in Melbourne, going to a random field and just running in circles. Yes. But I would do it with my mates because they keep me accountable, right? And I think like it doesn't cost anything to do that. Like if you're in a situation where you don't have any ability to pay anyone, mm-hmm. you can use those resources. There's also a bunch of resources on our website.
Yeah, and you can do like as much as I'm wary of, your Facebook communities and those types of things, they can actually be really good for keeping you accountable and that type of stuff. I just, obviously if you're getting your financial information, you want to be careful in it. But if it's, savings goals, mindsets, getting hacks on savings and different things, like you can actually build some really good support in there if you don't have a person that you feel comfortable talking to money about.
Yeah. Yeah. It's one of those things, isn't it? You might have like a uncle or an auntie or even a sibling that maybe is interested in this type of thing. I feel like a lot of families have that random uncle that's always talking about the stocks or something. Be careful with that too, I would say.
I've got an auntie that always talks to me about shares and I'm like, oh mate, it's not like
it's not my thing. Yeah. But finding out what matters to you is probably the key step. So we'll kind of pull apart that in the next episode on mindset and behavior. We do really want to hear from you. If you're watching this, maybe this is your first Rask podcast that you've ever tuned in for, or maybe you're on 550. We want to hear from you. Like when it comes to goal setting, like what tools do you use to track your goals? How do you go about it? In the 11th episode of this series, we're going to share what you tell us, and we're going to try and find common threads so we can all get better, as well as answering your questions with Gemma. So there's a link in your podcast player or on YouTube in the description that says ask a question, and you can select the Australian Finance podcast in that, and it will be sent through to us, and then we'll collect everyone's notes and feedback and advice, and then we'll kind of share amongst everyone. So reach out if you have any feedback for us. Gemma, this has been heaps of fun. Goal setting, getting on top of your goals. Next episode's all about behavior and mindset. I'm looking forward to it. So thanks for joining me.
No worries.
Thanks for listening to this episode of the podcast. Our sponsor for this series is Betashares, a leading provider of ETFs here in Australia. The ETF that I want to review rapidly for you is the Betashares Diversified All Growth ETF, or DHHF. Now, you're probably thinking that's quite a mouthful, so let's break it down. Firstly, Betashares. Betashares is one of the leading providers in Australia for ETFs or exchange-traded funds. They've been doing this for well over a decade, enabling investors from across Australia to invest in a range of ETFs, from shares to bonds to cash and beyond. Secondly, diversified. We use the name diversified in ETFs when we think about one investment into an ETF having multiple things inside of it. And by that I mean you can make one investment into one ETF, but within that ETF, it is diversified across what we call asset classes or investment types. A good example of this is this ETF, which invests not only here in Australia in Australian shares, but also in shares listed on the international stock exchanges. One investment diversified across multiple investment types. Finally, all growth. This ETF is designed primarily to give investors exposure to shares across the world. So it has around 37% of the portfolio invested in Australian shares and the rest in global shares, including the United States, markets outside the United States, and emerging markets. What makes this ETF quite unique, other than its low fees of 0.19% per year, is the fact that it invests the majority of the portfolio overseas. This is important for investors looking to build their portfolio because chances are, if you're watching this or listening to this here in Australia, you have a lot of your wealth tied up in the Australian economy, whether that's through your job, your superannuation fund, your house, business, so on and so forth. So by being diversified across the world, you actually get exposure to things outside of our country. This is important because Australians tend to have something called home country bias, and this is where we invest in the country we live in. It's not particular to Australia. Investors right around the world tend to favour things that are closer to home. However, a lot of study shows that we should be looking beyond our markets and our shores to invest in some of the world's leading companies. A big reason that investors consider the DHHF ETF is convenience. But within that convenience, what you get is exposure to thousands of different companies or shares through one single investment. I'm talking about companies like Apple, Google, Microsoft. All those companies are found abroad. And so by investing in this one Australian ETF, you can get exposure to things outside of our shores, some of the world's leading companies. However, this ETF also invests in Australian shares. So you get exposure to Commonwealth Bank, Telstra, Woolworths, and literally every company as you walk down the street. Chances are, if it's an Australian business and it's a big one, it's inside this ETF. That's what makes this ETF very popular amongst investors who are just starting out or pursuing long-term growth in their portfolio. So this ETF is designed as a core building block in a portfolio, hence the name diversified or growth. I think it's primarily for investors that have a long-term time horizon and are willing to take short-term risk for that long-term growth. This is one of many ETFs that you could consider as part of a diversified portfolio. Be sure to check out the PDS and TMD available on the betashares.com.au website. Thanks for watching this video on the Rask Network. While you're here, don't forget to like and subscribe so you can get videos each and every day on business, finance, investing, and so much more.